And so, Matt, you disagree with Wilson's take on earnings revisions?
Yeah, I do. I mean, I have huge respect for Mike and his work. And, he talked about the rate of change. I suppose the rate of change is improving, but, earnings estimates are going down and have been going down almost every week. I mean, every week, but like 2 in the last 10 months. And they have been going down since April. So maybe the rate of change isn't as bad as it was, but they are going down. I don't know how else to state it if you look at those consensus earnings. And, of course, we see that the economy is starting to slow even more. We're seeing that whether it be the Citigroup Economic Surprise Index or just, the numbers themselves, like the retail sales data we got this week. And so that just raises concerns in my mind with a market that's trading at more than 22 times earnings, more than 3 times sales, and more than 5 times book value. Your risk-reward situation or equation is much more to the risk side of things, not to the reward side. And therefore, I think at this point, you're not going to miss much if you put some money in cash. If you're fully invested, you're taking a big chance. If you're raising some cash, I think you'll be in a little bit better shape right now.
If you're getting into a defensive posture, are there particular areas that you like?
Well, again, like I said, the thing with cash, if you go to 10, 15% cash, that's actually paying you something right now. And like I said, I think the upside potential in the stock market is like 3 to 5%. But the downside could be anywhere from 15% or even more. And again, that ratio is that way. So in the defensive areas, one area, of course, is gold. It's a win-win situation. You think, well, that's a defensive play, but guess what? It's outperformed the stock market since the bear market lows of 2022. So you're going to win if we have some problems in the Middle East or not. And I think the same thing with certain other defensive areas and some unloved areas like the energy sector.
Which means that gold, Matt Maley, which has outperformed stocks this year, in the past year, and in the past, I think, 25 years. Gold, just a rock of metal, may be a better investment than like NVIDIA. It's kind of mind-blowing.
Well, yeah, it is, Brian. But, and that doesn't mean, like I said, we're not telling people to go to 100% cash. And to, if you own NVIDIA, hold on to it. But to have at least some, I mean, for many years it was, have 5% or 3% in gold. Well, maybe have at least 5% now, or maybe even a little bit more for the reasons you touched on. I mean, the flight to safety issue is becoming a problem. Sometimes it works in the crypto market, sometimes not so much. We're having some issues with the dollar that maybe not working out as quite as well recently. Well, guess what? Gold has been working for 5,000 years, so I think it will continue to work well because we have all these issues about a slowing economy, slowing earnings growth at a time when the market's really expensive. And then, of course, we have these geopolitical issues. Why not have some protection there?
We were talking with Steve Leisman a little bit about the push for the Fed to cut rates this year, the other factors that are playing into that. For instance, labor inflation, wage inflation is a real factor. And when I'm talking with CEOs, they're saying, okay, well, we've already raised what we're paying out in wages, and now we have to worry about the immigration issue taking our workers away, and can we refill and backstop some of those issues? How much do domestic politics play into the way you're thinking about where the markets go from here?
Well, that's certainly a key variable. And it was interesting where, Mr. Waller had said today, where he might look for a cut in July. But, for the reasons that you're talking about, the chairman, the head of the Fed, said just the opposite, as you guys alluded to in the previous comments, Steve. And so we have inflation issue to worry about. Then, nobody's suddenly talking about, what's going on with the tariffs. That's overseas. But domestically, what's going on with this tax bill? And, it looks like now it's not going to get passed by the 4th of July. Not that I'm really worried about that. They'll get it passed at some point. But what kind of an impact is that going to have? It is going to increase the budget deficit. We all know that the budget deficit is finally becoming something that is impacting the markets after many decades. So it's another reason to be at least raise a little bit of cash here. Again, and I guess the last thing to say about this whole cash issue, if you have it and the market's going down a lot, you're going to be much more comfortable. And so you're not going to be selling at the bottom when the market's bottoming out and people say, I can't take it anymore, just get me out. That's what usually happens. People sell at the wrong time, right near the bottom. If you got a little cash on the sidelines, that enables you to have the confidence to buy a little bit when that happens.
You do wonder, Matt, no need to comment, what happened to all the people who sold in early April when everything was tanking and we had the most violent, rapid recovery in the stock market, if not ever, certainly in years. It's a great point. Good lessons. Have a great weekend, Matt Maley. Thank you.